in Japan. The Japanese government is still doing part of the BOJ's work, and with the foreign market coming back a bit in the Japanese bond market, the yields have been shying away a little bit. So that de facto is putting a bit of downside pressure on the yen. But I found this move pretty strong, and I don't find news or a fundamental reason anything else than interest rate differentials and what I've been talking about with this stimulus package. I still think this 134, 35, 45 is mega important. It was an accelerator on the way up. It was a level that held here, and it really dumped really fast when it broke through it on the US CPI day. So I really want to respect this level. This is going to be very important. I expect resistance, but I wouldn't. If you want to trade it, against it, I would really not give it too much room. And if 134 and a half, 50, 55 gives way, personally, I wouldn't like it because it can be an impulsive move, which brings us back all the way into the 135s. If anything, we'll see. We don't have well, apart from the building permits, we don't have any US data. Oh yeah, we have July capacity utilization and industrial production later on. So those might be these smaller movers, but it may be enough if the dollar yen is still bid by then to take it through, or at least give it a thorough test of the 134, 35, 40. It's important enough up there, in my opinion. And straight to Mike, what about the dollar CNH and dollar yen correlation? Yeah, but it comes and goes. We've seen in the past, Japan, when I was over there, we had a bit of a stronger correlation, and there's a lot of trade traffic going on. But since the pandemic and since the nervosity between China and Japan, the correlation has been gone a little bit. If not, they rarely use in tandem. They might actually move opposite sides, as we have seen yesterday, where dollar yuan was flying and dollar yen was actually more offered than anything else. Of course, it came back today, but it's a bit of on and off correlation, whether it be inverse or in the same way. I wouldn't trade dollar yen on the back of dollar CNH and vice versa, to be honest. A couple of yen process which were interesting over the past sessions, and by lack of time, I haven't really covered on the prior flow shows. But we see, for instance, the Aussie yen at the triangle yesterday gave it another try up there, 95.10, and then got this severe rejection when Aussie started to weaken and dollar yen. I think that there's been quite a bit of liquidation yesterday going on in this cross. Fact is that we are holding around 90, just above 93. I think that's an important enough level to take into account. Okay, we are back higher now. And on the other side, watch this level again. The low 95s are going to be important. So we have about 200 points here to play around in. And to search for the next direction if anyone wants to trade it. It is after dollar yen and euro yen. It is Mrs. Watanabe and Sons' third instrument of investment. Also, the Japanese investors are keeping a very keen eye on what's going on in Aussie yen as well. Yeah, we went. This one is actually relatively interesting because we went twice inside the cloud, but we didn't get a close inside it. So add 93.5 to the levels that we are watching over there. Then I'm moving over, sorry, to the Kiwi yen. Bit of the same. This smaller triangle inside the bigger one. 86, just above 86, 86, call it 10. And then here, similar thing as on the Aussie yen. Keep an eye on this 84.35, 35.50 zone. In the Kiwi yen, especially into the RBNZ, watch this space. It could really get moving. The market is kind of looking at the RBNZ a little like the RBA is to go for another 50 BPs coming night, and then possibly building in a pause or going completely data dependent and not really knowing what's going to happen next. So there is a bit of a sentiment in the market that people could be waiting for a 50 BP hike RBNZ and sell the spike afterwards if it would come around. So be a bit careful with the Kiwi coming in to the RBNZ tomorrow. Just let's have a quick look at the Kiwi. So we're seeing this upward trend line. We're on a little bit of support here around 63.15, but I'm not really interested in trading Kiwi ahead of the RBNZ. I won't probably be awake, and it's a very volatile. It can get very volatile because of the liquidity in the summer markets, and especially the Kiwi is not really one of the biggest liquid markets. So be a bit careful. Watch this channel, especially if it would ever get to 64.70. I've been highlighting this last week as well, the 64.70 on the Kiwi, and it did fail up there. So this is going to be again an important one because now the top end of the channel is coming in there. But I wouldn't be surprised if we find already offers up around 63.80 towards 63.90, 95 figure perhaps.
Given the way the Antipodeans are moving at the moment, we're just in a little bit of a bearish phase this week in particular. If you were about, would you sell a rally in Kiwi over the RBNZ if you got a spike higher, decent spike higher?
I personally, I'm pretty neutral on the Kiwi because we have already had this quite big rally, but I would give it a try if we really get towards the top end of the channel. I don't really like to trade it in between. But again, is it Kiwi dollar that is going to be the more interesting part of things, or is it going to be Kiwi crosses? I'll show you the Kiwi.
I just over the announcement, so because as you said, it can be a volatile one, and if they hype by what's expected, and we get a 100 pip sudden spike, if you were sitting in front of the screen, would you job that? Sure.
I probably would in this occasion, but equally I would consider it a very short-term trade. I wouldn't sell a spike and then go back to sleep and wait for the next couple of sessions to develop. I would probably counter trade a spike, but really very, very short term, like really short term.
Yeah. Cool.
Okay. So here, this one, because this has been really, really selling off hard in the past month. A bit of a similar thing. Although the euro has a lot of weight around its neck, I wouldn't be surprised if after the RBNZ, the Kiwi traded just slightly weaker. But I do expect, seeing the weight on the euro, that we find sellers around 161, if not 161.5 on this pair. If you would go back above 161, 50, 60, there may be a few sellers needing to adjust their books. So watch 161 the figure, but then the more important one, in my opinion, is 161, 50, 60 on this one. If we get a test and we cap, then nothing changes, and we can gradually move back lower on that one. And then the classic ones, gold doesn't know what to do. We are trading along this trend line. Also a bit of support here in the 1773s, been low yesterday. I think it's 1772, 73, and then 1804. We're in this bit of a sideways price action. I'm not looking to do much, but forces to admit that we have failed the break above here. So it would only come as half of a surprise if this would give way and we trade back into those 1750s, which is a bit of a traffic zone as well, in my opinion. It wouldn't surprise me if we do, let's put it that way. But I have really no clue and no firm idea, at least on gold right here and now. Silver, similar kind of thing. We failed to go above this, and now we are like. There's two flags here, and Craig in our room rightly pointed out to this one yesterday. I was rather looking at the blue one. Both can be valid, in my opinion. So we're failing here, and I think there's two reasons why silver is again underperforming gold. It's because of those sluggish Chinese data. Because of the comments coming off, because of, and then we had additionally this Empire, New York Empire number coming on there. Since the silver, as we've been repeating endlessly, is an industrial metal. When things go slower on the manufacturing side, this should not come as a big surprise that silver is a bit underperforming gold. So I'm going to be patient on this one, see what's coming out later on, because we do have this US industrial production for July coming in, perhaps final numbers, I'm not sure. But we do have it in coming in later. To me, it has to get back above here 2040, 550 to give us a chance to get back for a test above there. This one now seems to be starting to water down a bit, although we never had a daily close above, if I'm correct. I'm going to be patient, perhaps even for a move back down here, 1940-50, if it would come on weaker industrial data. Moving over to the emergings. On the dollar mix, I don't have a position, but the only thing I can note here is that we are getting into support around 75, 77. To me, it's a bit of a support zone at this double low here before. Here we had a bit of a hesitation as well around a tad lower in those 1970s. It's a bit of a support zone. And that brings me now to say that I'm starting to be a bit cautious on my euro mix. We have broken below. We are below the red line. We are closing in on the rapidly on the 2020 low, and we have another important low here at around 1970. I'm short. I've been trading it around. I'm still a course short, but I will for sure, if I get anywhere close, perhaps around 2005, take a piece off more, and then more around 1965, because I don't know whether it's euro going to do the next leg, but it should be the euro doing the next leg if this thing is to come down, in my opinion, because I think we are getting closer to support levels on the dollar mix again. If dollar mix, of course, crashes through 1970, 72, 77, it's a different ballgame. But for the time being, it looks to want to stabilize here in the 1980s. Dollar rand is the opposite. Dollar rand has been like really flying because of the commodities coming off, because of manufacturing data coming off a little bit. Rand is a bit more fragile all the time, especially that it has also more ties to China, I think. And ongoing energy woes here and there in South Africa. So I do think that if you look at it from a more fundamental point of view, that some of the strength that the rand had enjoyed has been flowing over back into the mix, which is perhaps enjoying it a little bit more thanks to its proximity to the US, and that's also one of the reasons why I rather would keep Euro-Mex and Euro-Canada, for instance, than things like Euro-Rand and others. But we are getting a bit closer to a resistance zone in the dollar rand, somewhere between 56, 59, and at this 1662. Bit of a resistance zone coming in here. If ever we get back below 1635, this recovery could be seen as over. But I'm not trading it right here and now, so I'm just watching the game and having a beer. I'm just going to show my own dollar China here, and I think we've broken through 678.40, then 679.30s, a retest, and we jumped again. I think there's a chance this has broken now. I'm going to add until, if I see, until 678.5, and then give up somewhere below 678 if it doesn't work, because then we are back into the triangle and have a chance to get back below 675s. But I'm only in very, very small, so I've got plenty of room to maneuver. Perhaps even I may even change tack and just wait and add until 675 and then give up if that breaks. But it's still very early days. But it looks to me like we are in for a break here, especially if PBOC continues. Ryan, that kind of rounds it up for me for today.
Yep, no problem, mate. Do you want me to take that back? Where am I? Here we go.
Oh no.
Yep. You want to take it back? Okay. You're mute. You're on mute, mate.
Okay, so this is the last one I wanted to show today, because it poked my interest again when Euro Aussie started to sputter and when Euro dollar came down to this 121, 2030, I changed managed my books a little bit and added a bit short Euro Canada this morning. I'll likely try to add until mid 131s, and then see what happens if we get back above 132, if I need to get out or not. But in my opinion, there's a fair chance, especially, well, I mean, if oil holds and if gas prices hold, there's a fair chance that we could see a bit lower levels on these one again. It's not really a long-term position, so anything down to 130.30, I'll be already a happy man. I actually already started to slice just a little bit to see if I'm able to add a bit higher instead of wanting to just let it run right now. So, but I think there's a chance for these to trade back lower a little bit. And with that, I give it back to you.
Yep, no worries, mate. Right, so just before we talk about a few other things, a couple of things I want to mention. For you guys and girls who are viewing this, please feel free to throw in the comments, in the questions, anything you want to look at, you want us to discuss, but obviously give us a bit of insight into what your thinking is. Let us know what you're looking to trade, and if you need if you have any questions about that, we can try and help you with that as well. But I want to hear from you folks and get your interaction. And before I went away, I also put out a message that I'm looking for perhaps some of you to come on board with the Flow Show, and we want you in as perhaps a guest for a couple of days, just to give the other viewers some insight into how other people trade. It's okay, me, Kay, Stel, Steve, Blake, whoever coming in and talking about what we do, but I want to get the perspective from some of you guys and girls out there, just to see how you approach markets, just to see what you're looking at, how you go about managing trades, setting up trades, that sort of thing. Because I think it's important I don't want there to be a barrier, if you like, between myself, Kay, and the guys on the Forex Analytics team on one side and you guys on the other side, and we don't meet in the middle. I want to get some of that cross interaction, because for me it shows that the people who are sitting here watching the show as well, everyone is the same. We're all in the same boat together, no matter what our experience levels. We're all trying to do the same thing, and so I want you folks to hear from your fellow traders, not just us lot at the Forex Analytics team, so you can understand that you guys all think about the same things. The questions we get in the chat rooms from a lot of inexperienced traders, they're all the same. If I've heard one question, I've heard it 1,000 times. But when you're trading on your own, and when you're not in a community, sometimes you can think that question you have, you're the first person to ask it, or you're the only person who thinks it. And I want to show that that's not the case, that we all think the same things. And it's something I ran when I was at Forex Live called Guest Trader, where I got some of the readers on for a week to blog about trades and about their insight into markets. And it's a great eye-opener for everyone else to see that, hey, these guys aren't on a pedestal. They are thinking the same way as everyone else, and that and the people you trade alongside with and sit in the viewership with, you all think the same things. So if you want to do that, I'll pop my email address up in here as well while I'm doing that. You can contact me directly. If you want to take part in that. I've already had some emails before I went away on holiday from people who want to do that. So I'll be in contact with you guys about that as well. We'll set something up. It doesn't have to be big, maybe come in for one show, 2 shows. We'll have a little chat. As I say, fire some questions off at you, just to get people understanding that we're all trying to do the same thing here. So if you want to do that, you can email me there on that email. The only thing I will say is, if you are at a trading firm or anything like that, I don't want any promotional things. This is purely retail trader individuals who are trading and to give some of their insight. And ping me there, and we'll get a couple of those sessions up while it's still quiet over the summer, and hopefully it'll be good insight for you guys and girls. Right, so back to the charting. As I say, let's have some thoughts from you boys and girls about what you want to look at. I do want to look at stocks, and Lucas has raised a point. I was a little bit confused with strong stocks and strong USD environment last week and stepped out. It's not the case today. We talk about risk, okay, and it seems like a lot of the market these days, the definition of risk on seems to change every 5 minutes. It's the goldfish mentality. A few years ago, risk on was pretty straightforward. Now it seems to change daily. 1 minute stocks going up is risk on, 1 minute stocks going down is risk on, and the same for the dollar. I can tell you, I pretty much lose track these days, unless it's adamantly clear, like yesterday, where we saw commodities dropping because of bad Chinese data. Pure risk off move, in my opinion. That was more clear than some of the noises we've been seeing previously. These correlations and risk definitions, they change every 5 minutes, and we shouldn't always look at one thing to trade another thing. So if you trade stocks based on what the dollar's doing, trade the dollar. If you trade CAD based on what oil is doing, trade oil. Yes, we look at these correlations to see which way the wind may be blowing any particular asset or currency, but don't get too head up on what something else is doing while trying to trade another market. Use it as background information. Is the correlation strong or weak? It just becomes another piece of the information you use for trading that asset. But regarding stocks, I mean, we're in that situation where they just can't go down at the moment. It's been the case for a couple of months now. Looking at the S&P there, a lot of eyes on this 43 level. It's a big, strong level. Let me know if any of you guys are shorting it up here. I'm tempted to have a short we haven't got. We've tested it a couple of times. Let's take that down to a bit of a shorter time frame. So we've had a few tests now. So it is holding as a strong level. So a lot of people, particularly in our Forex analytics room, have been looking at this level. Whether I would go with a short, I'm not sure. As I say, at the moment, it's just not going down again. Stocks are in that, BTFD by the fucking dip. So how would you trade it? If you feel like you want to short against here, I've got the level around about 409, 4309.10, call it. That's the bit of a line in the sand. If you want to short up here, that's your where your wrong point. If we do keep banging our head up here, but not dipping significantly, I would be tempted to stick a buy stop just above the level, maybe around the 15 mark, 13, 15 mark, somewhere like that. Just if we do bang our head for a while, but don't dip, the chances are we're going to break it, and if we're going to break it, it's going to push on up. So if you fancy shorts, you could keep them fairly tight into the 43s, a stop above here, maybe look to reverse it. As I say, I would maybe go with stick a buy stop in and see if we get a break higher, or at least a little push, and then a further confirmation that we're not going to break through here and go for shorts there. But based on the data, the data was soft yesterday, and still stocks rallied.
Yeah, right.
I think stocks are in that.
Ryan, just something to add on to the equity markets this week. It's OPEX week, and funny things can happen. So there might be a couple of moves which are not really normal, or which we usually would expect in a normal market, and add that we are in a little bit of a summer market as well, and that positions at the big players have been reduced, because they were actually expecting the stock market to suffer a bit, but so they have reduced positions. So that means that volumes in the market, we need less volume to create bigger moves. So we have to take all of that into account without picking a side on the stock market. I have absolutely no idea right here and now.
Yeah, absolutely. And that's going to be Friday, isn't it? I believe the OPEX it's usually on a Friday. But if you take it over the last couple of months, it's in a pure uptrend, and that's my basis for thinking about it. We're in by the fucking dip mode again, because we've been seeing this now as we've been getting weaker data. So is this the stock market again thinking about the Fed pivot? Is it thinking about the possibility of QE? Or is it purely that, despite seeing softer data, America is still the least weak amongst all the other countries, and that in itself is going to, that's going to get inflows into the economy? Because if you're an investor and you're looking around, where's the best place to park your money based on the economic fundamentals? The US is still probably the biggest economy that isn't doing as bad as everyone else, and rates are going up. So you've got the interest rate value there, the yield value there, and that could be what's driving stocks higher, that America is the best place to park the money. But anyway, just purely from a trading perspective, we've got a clear level up at 43. It's how you want to trade it. You could you could short it up there and switch into a long, or you could just sit back and put a buy stop and sit back and see what happens if it does bounce higher. Right, let's have a look at a couple of the others. I want to look at dollar CAD as well, because I'm thinking about having a little trade in this one. Take it down to a 30-minute, I think. We've got a bit of sideways action. It's not doing an awful lot, but we're in my big zone that I've had on here for God knows how long. And 129 is a bit of a pivot here. It's got a little bit of a downside to around about 85, 88, whatever you want to call it, where you've seen that when we've held below, we've found resistance around about the 85s, 90s, that sort of area. We're doing it again today. What I want to see is a proper hold in 129. If we get that, the chances are that we do have a push higher here. I'm thinking about a small long below this 88, 85 area. I'll be out. Not a trade I'm going to give a lot of room to at all, more just an intraday scalp, if you like. But I'm thinking if we are seeing some softness creeping in, or the market sensing more softness from China, we've seen the manufacturing data from the US, from that Empire State, really collapsing. That's not a good plus point for commodities like oil. So we could start to see oil continuing its move down. And, if we take a look at the picture here, we're pretty much, dollar CAD is exactly the same pattern. Obviously the opposite way around. So we've had the move down. Oil's looking very soft. This was a big, strong area here of support that we were looking back on for quite some time. Let's have a look at a bit of a longer term chart. So you can see this sort of zone, 93s, 94s, bit of a decent support. It was a break point higher, found a support. Now we're potentially looking at it as a resistance area, which will keep the downside pressure in oil. Again, another one that's just for the last couple of months or so has been trending in a direction that's trending lower. If we do break below this 87 mark, then we could be heading down towards the 80s. That's going to be a natural negative for CAD. So obviously we see dollar CAD moving higher. So purely from a bias perspective, yeah, I'm looking at potentially having a little long. It'll be a trade that maybe just a short-term trade if I can get it maybe down here into 129 if it holds. I'm not going to chase it up here, even if it's 10 pips away. Just to see if I can sit in it and run it and see if we get a push up, maybe towards the 129, 50s, 60s, this little band up here. If not, running up to the 130s, maybe add on a break through this area, build up a little bit of a long position to see if we're going to get this manufacturing weakness and further weakness in China, so on and so forth. Right, let's have a look through some of the comments before we call it a day. Hugo was hoping for a bounce in cable from where it is after news yesterday. Looks like you bought too early. I was looking at that this morning. Looked like a decent hold of 120 again, and that's become the number. Were you looking on I take it you were looking on a bounce for the jobs report, Hugo. That's again, it's been a problem with the UK stuff and UK data. It's not really given us much to put our teeth into. Yeah, we had a bit of a decent bounce over the data, but it's gone back to trading the rest of the global story, if you like, dollar and whatever. But 120 does seem to be the number right now. If we get a break under there, then again you're going to be looking at potentially further downside, at least down towards these prior lows here, around about the 60s, 65s, maybe even worse. So in trading terms, you've got a number. 120 is your level. If you want to try longs, that's where you want to try and get as close to as you want. If we break under here, it's potentially valid to then flip it into a short. If you're not too keen about shorting a first break, look for a break to confirm, i.e. we move through the level, come back up, test it and hold it. If we find that we're holding it, then it gives you a bit of conviction to get into a short. Again, you don't need to give it a lot of room. 10, 15 pips over the big figure. If it bounces, then you're wrong. But rather than go with a straight break, look for a confirmation bounce. Maybe we get down to 80. It bounces back to 95s, 97s and holds there. Then you've got a bit of conviction to try a short. Conversely, if we have a little break and it moves right back above, it could just become messy. You let it sort itself out and see what the levels develop from there. Still, what's Stephen asking about there? Let's have a look. Any other questions in there? Sorry, just scrolling through it all. Richard, talking about this kind of inflation can only be stopped by curbing demand, which is not pretty. Yeah, but the problem is that you can't curb high energy prices because of what's going on in with Russia and everything else like that. You've got to switch your lights on. You can't curb demand by getting people not to switch the lights on unless you're putting in, things like they're doing in China, which is restricting usage. But doesn't really curb demand. It just stacks it up, stores it up. And it's the problem that central banks have got, you know, particularly with inflation and energy. It can be a temporary factor, but it's how long that temporary factor lasts. And rate hikes are not going to get wholesale energy prices coming down. Just means people are going to end up paying more for it. And as you want confirmation before fading spoos, maybe 43.50 to get already established shorts. So you want a little flash out, Anders, do you, before you start getting into shorts? Get a few people cleaned out at the top there. That's an interesting way of looking at things. I often see a lot of people talking about that. They have a level. They want to see the level flushed before they actually trade the level. My thing to that is, if you've got a level, why not trade the level? A level's a level until it's not. Why do you want to see a level broken before you want to trade it? That's an interesting question, actually. So maybe I'll note that down, and we'll bring that up in another session. But anyway, time's ticking on. I don't want to keep you too long. Thank you very much for coming to the Flow Show. Please, if you're on the social medias, do like us, do spread the word, do retweet the posts when you see them in the morning, sort of 10 minutes before we go on air. It would be appreciated, very much appreciated. Spreading the word and getting more and more people on here, increasing the conversation. Thanks as always to Kay and to you guys and girls. Thank you for all your support, and we shall see you tomorrow.
Have a good day, guys. See you, Ryan.